The conjecture around trend of gold price doesn't seem to end. However, the behavior of gold prices suggests that we are on the edge of any financial crisis, geopolitical crisis, or bubble which may burst any moment. Please peruse the disclaimer very carefully before proceeding with the video further. Whereas markets are relatively calm, inflation looks tamed, and the trade skirmishes are no real threat, yet gold prices are climbing again. In India, the yellow metal are close to 1.3 lakhs per 10 gram of 24 karat gold, and in the US, it has already crossed $4,000 mark per ounce of gold, setting new records. So why is gold rising when the environment now seems a bit stable? Yet gold prices are climbing again. India looks relatively more stable now with strong growth, easing inflation, and internal demand cushioning external risks. US is showing signs of resilience, but is more exposed to overvaluation in the tech and AI sector and slowing growth. Traditionally, gold rallies when market panic during recessions, war, or inflation shocks. But now it is rising even as equity market. This disconnect comes from something deeper. Global central banks are quietly building gold reserves to hedge against the weakening confidence in the US dollars. If you have seen the historical trend between 1970 to 79, gold prices in US rose 600%, while S&P sank 11%. During Great Recession in 2007-9, gold again rose by 37% and S&P nosedived 23%. By contrast, as gold was rising, S&P has recorded on 8th October 25 one of its highest point. Signs of crisis were absent from the bond market and dollar strength continued. An expert cited that this discrepancy was almost unprecedented. In 2024 alone, global central banks bought over 1,000 tons of gold, led by countries like China, Turkey, and Poland. They are preparing for a world that might rely less on the dollar going forward, and that's driving long-term support for gold, not panic, but planning. Back home, India is not just a gold-loving nation, it's a gold powerhouse. Indian households hold estimated 25,000 tons of gold, which is combined reserves of the top 10 countries' central bank gold reserves. And Reserve Bank of India has also added up stockpile of gold and has crossed 879 tons in 2025, the highest ever. With rupee weakening from rupee 63 in 2015 to around 88 now, being the highest ever, importing gold automatically gets pricier even if international prices stay flat. Interestingly, Indian investors are now moving from physical gold to sovereign gold bonds, SGBs, and gold ETF. Today's investors are buying digital gold quietly but steadily. Gold is more than metal. It is trust in tangible form. In times of global uncertainty, elections, or currency volatility, Indians see gold as insurance against the unknown. The psychology alone adds fuel to every price rise. Opinion about gold price movement hereafter is divided. The pessimists assume that for gold to crash, one thing has to go wrong, and that is AI burst. With industrial demand from sectors like EV and solar panels adding new pressure, and rupee expected to stay soft, gold may continue to shine in India, not just as a tradition, but as a strategy. Morgan Stanley recently suggested 60-20-20 portfolio split between equity, gold, and debt. The sanguine feel that AI boom will continue to fuel the stock market, hence keeping the economy hot against any threat. Someone aptly said, the financial markets are like fashions, and the FOMO, fear of missing out factor, will continue to drive compulsively retail investors to buy more precious metals. So while global market looks stable, the world and India are preparing quietly for the change. Central banks are buying insurance in gold, and Indian investors are following their lead. In this game of stability, gold remains in the ultimate wild card.